here that is based on the 30-minute candle, but using the same principle as before with the 1 2 3 4. So let me show you. We're going to go back to the 25th of September on the NASDAQ exchange, okay, and we're going to put it to a 30-minute chart. And what we're going to do with this 30-minute chart is, I will explain the lines in a minute. I put two lines, this line here, and I put a line below, and that marks the open of the candle, and that marks the high of the candle. Those two kind of navy blue type lines. And what I then do, once I put this blue color on, or I can make them darker, navy blue, more darker than they were, in case if you are trying to distinguish them. And then what I do, because there's too many blue colors there, I may actually make it white just for now, just for the sake of this video. So we may mark two lines, white color, then I drop down to a minute chart, and we go back to the 25th September 3 a.m. and let me show you. And this is the candle. So now you see the white, they're not really that visible on the yellow color. That's why I like to maybe give it another. I'll make it red, so red might be more visible to the eye. So I mark the two red candles, and the red candles, let me pull this in a bit, so we know the red candle is the open. Also at the open, remember, I have the blue candle as well, just for my reference point. So I have the red and the blue. The red and the other red is marked for purposes of breakout. We're looking for a breakout. So what happens, and also this becomes our range in the London time frame. So what happens, the price goes up, comes back down, pushes below the line, but it doesn't really do anything. I mean, it closes below the line, we don't get a second candle close, and we start pushing back up, and we get this structure. We get this structure break here, and there we mark our 1, we push back and we mark our 2, and we place a line at the 2 to mark our 4, because we know price is going to return to it in the future to take out the 2. So first it's going to take out the 1, then it's going to go up, make a 3, and then it's going to come back to take out the 2. So now what happens, when it comes to the 2 and it makes this candle, the black candle, and it starts making the blue, immediately we place our long position here at the open, and we let it ride up. We kind of take it to the line, to the red line. So we know that's our line, and our stop normally for this one would really be, ideally be, below the zone here. That's going to make a slightly bigger stop, but it's okay. We need a bigger stop in this, because this can move a lot, okay. We can have a smaller stop, which might just be below the 2. That would be a very tight stop. I mean, if we did this, it's a very tight stop. We may want to just go slightly, not go all the way here, but just go about 40 tick stop. Let's make it 40. So what happens, we go up and we have target of 88 ticks, and we meet our target. For 2 micro contracts, that would be a $88 trade, and which took less than half an hour. And for a 1 micro contract, that is a $44 trade. And for a mini contract, which is $5, I mean, my goodness, that's like that's a 88. We're talking about 88 times 5. That's a $440 trade. So I'm not saying you have to trade the minis. You stick to the micros. Okay. So you got your micro, you got your win, and you are out. Okay, you are out with this win, and now we know the price is going to come back here. So we're looking for a pullback. We're looking for a candle formation for it to come back down, and we can we have two choices. After the 3 is done, and when this candle pushes up, or this one pushes up, we can take a short. Okay, we can take a short position, and what we should do is do the same. Is take profit at the 2 or just above the 2. I prefer the 2, and then I do this as a I normally put it at 55 ticks. Okay, normally I do that. You can have a smaller stop, but I still recommend 55 to 60 tick stop for a 1 micro. Okay, because you're aiming for a 125, which is, you know, a big target. So, you know, if you're going at 40 or 55 is good. So let's just say you do 40 for argument's sake, for the sake of this exercise, and you go short. You're already in profit here. I mean, you can decide to take this profit and close the trade and you're out. Or you may decide you want 2 levels of profit. TP1, you know, about 50%, and the 50% targets reached about here. This is a 50%, 82 ticks. Again, is almost for 2 contracts, small contracts, $82. So, and you take it all the way down, and we wait, and you can see over here, like you can see, and boom, it takes out the 4. See here, it takes out the 4. You got your target. Now it's going to reverse, and we look to go long, because next is going to take out the 3. The 3 is here. Okay, let me mark out the 3. The 3 is here. It's going to take out the high of the 3, and if we look, and it, you know, you reverse your contract here. Here you reverse your trade. You might put a buy over here with your stop. You know, like I said, I do 55. You might want to do slightly less, and then you let it go, rip to the 3, and you got a 118 pip target on the other end. Okay, it's a straightforward win using the 30-minute candle as a range, and then you still work the 1, 2, 3 in the chart. And I think that gives you a nice win.